So this is a question about the mechanics, and we have touched on this, but the mechanics of inflation, and somebody's basically asking, how can we have inflation when we have really high unemployment because there's no demand component?
Well, the 1970s, I mean, there would be that. There would be the great, when you look at components of the Great Depression, there's, again, it's not everything. A lot of people actually think that way. I had one institutional client say, he stopped me in saying, well, what you're saying about stagflation, it sounds like an idea, Keith, but my mom, he literally said, my mom taught me that you aren't allowed to have your own facts. And I said, whoa. I guess our moms have never met. I mean, the fact of the matter is that this has happened multiple times in history where inflation's rising and real growth is slowing. That's called stagflation, i.e. the entire base or broad base of the 1970s. So that's important. That's functionally what could happen. And that's actually why the 1970s, the U.S. equity market, and can you imagine if the S&P 500 traded at like 7 times earnings like it did back then? Like companies trade at 50 times revenues right now, not earnings. They don't have earnings, okay? You heard me, right? Let's look at a couple of other charts. We'll go a little overtime here today just on this. Slide 122, okay? So in the current deck, you can see the other big thing that would most likely not make it the commodity bubble that we saw in 2011 is that the other side of which is the demand piece, is China is on its ass. So again, don't forget when post-China coming into the WTO and into the 40-year low of the US dollar devaluation, which you can see that dollar chart on the left peaked right in 2011. That's when Bernanke just smoked it, okay? He would say that there's no inflation, which is completely lying about that. But again, that's he was trying to protect his political reputation, but history has a not so funny way of making fun of that. So again, that's where it was. So again, the dollar could go down a lot from there, a lot. And what they're doing right now is beyond a lot, okay? Spending trillions upon trillions. Our political strategist, JT Taylor, who's awesome, you should follow him on Twitter, of course. He now, when we talk about the next round of infrastructure or whatever else, he's like, he counts in trillions. They don't even count in $500 billion increments anymore, okay? So, of course the thing could be debauched and devalued, and that would be a disaster for humanity on this side of the coin in terms of Americans that consume a lot of commodities as basic needs, and that's a real sad thing, but that's what we're talking about. That picture, to me, says 1,000 words.